Hello, how's it going? It's just you, Don? All right, we'll just give it a minute here. How you doing today, sir? Nothing? Oh, I can't hear you. I got you got your there you go.
Against.
Hey, man.
Yeah, it's like the first down day I've had in a while.
Oh, the first down day, yeah. Yeah. Like
So,
from profitability standpoint?
yeah.
Well, we got to fix
Well,
that.
Silver ran out of gas today.
Yeah, yeah. Yeah, things have been a little weird over the last couple days here. I feel like I say that every week, but one of the things that I think everybody's been waiting for is the Fed, of course, but yeah, it certainly wasn't a bullish sort of sounding thing. It pretty much just saying higher for longer and
Yeah.
pulling it out.
It's like maybe one by the end of the year.
Yeah, maybe. Yeah, he was pretty clear about inflation. Just saying, we're not quite sure what's going on, during the summer months. So that can, indicate to me that we probably won't see, much out of the Fed for the next, couple months here. And also, if you look at some of like the betting markets, you'll see that there's really not a lot of like price increases that have been, or like rate changes that have been baked in. So, yeah. So, I guess the long story short here with the Fed and, all that stuff happening today is, it's not bullish. But I'm also getting some conflicting sort of, information out of them where it's like, we're still waiting, but at the same time, oh, the job market's strong but yeah, I think that there's, I don't know, maybe, I don't know, I'm going to say like funny business, but there's something weird going on with the unemployment numbers. If you think about it, like, I don't know anybody who's been laid off from tech that has been able to find something. But he did say something like that, to, kind of reinforce here. Hey, Rich Nelson.
They have to wait till they build the data centers. Then
That's right. That's right. Yeah. Or build some new AI tool or something to, analyze the data. Yeah, or something. But yeah, so I guess something's just a little weird with it. Like maybe, maybe because it's a big basket of jobs, like they have the non-farm payrolls, but a lot of those like, higher income jobs have, people have been laid off and they haven't really been replaced. So where did they go? So like I was reading an article the other day, a couple days ago saying how somebody, some person who was super driven applied to literally like all the jobs on LinkedIn that they were qualified for. And they didn't get anything. They got like 2 or 3 interviews, something like that. And didn't really go anywhere else. And it's a, similar story. So I have a lot of friends who, used to work in tech or still do work in tech. And they, kind of, mention like a gloomy picture there where it's like you're, kind of forced to work harder and faster when you were already working harder and faster. So,
well, fortunately, I don't have to worry about that anymore.
Yeah. Hey, great. I already stepped in the right direction. All right, guys. Well, let's get rolling here. We got a small crew, small but mighty crew.
Yeah.
So let's
There you go.
let's rock and roll, guys. All right. So I'm going to share my trading view chart here. All right. So we'll just start with this real quick. And then I'll switch to my more regular charts to kind of give you guys like a, I just want to do like a short-term analysis sort of thing here for this week and then what might set up next week. So I wanted to go over both like the bullish and the bearish projections here, and then talk through some of the other ones, like some of the commodities that have really been, giving us a, run from the money lately. All right. So without any further delay, so we've kind of talked about, and if I'm jumping around a lot, please let me know. I tend to do that and talk fast. So we've talked about this over the last couple of weeks here where, we've had just looking at the Nasdaq, we've got some, clustering up here, ending diagonals, just essentially like compression patterns. And it's been that slow, steady kind of grind up that, it's been frustrating to trade because it's been a very tight range. And if so that's kind of the Nasdaq hitting pretty close to the upper limit. And then you're looking at like the S&P here, the S&P, where you've got an almost, perfect tap here on this lesser known fib level, this 0.941. But what this kind of signifies here is that it's just things are slowing down. So even if, let's say, there is a new high, something like that, I kind of expect it to be short-lived. There's just a lot of the bulls are kind of running out of steam. We've been pinned in one area for a while. I think that on the way up, there wasn't a lot of participation from like the bigger institutions or just regular fund managers. So there's not a lot of inventory to distribute. And once we start to see some more of these, here let me change this to the daily view. So if you're looking at volume, volume really is the arbiter of truth here. So we get a pretty big rejection here, and that's only after like 2 days of topping and kind of price discovery. And then what we've seen here, so for example, Monday, Monday, it looked like there was a lot of buying, but not really. On average, it was slightly above average. But if you look a little closer, if I pull up the hour chart, what that was showing is really kind of this sea leg kind of thing here. And that was really, pretty much the whole day's volume. And I kind of regret not saying anything about it like in detail to the channel, because I kind of thought that, there was a possibility that we would have seen something more like this, where it just continues down. But instead, we got one of these, delayed response things again, which has been pretty annoying. So I just wanted to kind of draw this out real quick for short term, and kind of, go over the different scenarios. So we see like two of these, ABCs here, and what we've seen over here in the last couple of days. So this is where I think that there's a pretty big story to tell. If this is some sort of like, let's say, for example, okay, let's say the bullish scenario here is they want a new high. All right, so let's model that out. So this sort of scenario here, you could consider like a wave 4, but it doesn't really look like one because it would overlap this wave 1 here. So it's not really, I guess, like a solid like a solid impulsive kind of thing. I don't know like what Alex and those guys have been saying, but like I'm not getting this sort of vibe out of this. It just doesn't look right. It doesn't fit well with the rules. And when you stare at charts, as long as I do, it's like, if you got to struggle to make it fit, odds are it's not the right thing, or like the current pattern hasn't wrapped up yet. So let's assume here this bullish projection is they want to make a new high. Well, this does look very corrective in form. We have here as an example, I think I've shown this before too, this ABC up from the bottom. And a C leg, it should have like 5 waves within it, and you can count them. It's just looking a little weird. So as an example, you would think that this would be what you would see here, and you kind of have to struggle to make it fit up here, which to me it kind of means that like there's sort of an irregular pattern already happening, which means, so like this box here, this should have been sort of like your top in theory, where you could draw like a 5 wave sort of structure here, which would complete that C leg, kind of like how we talked before about it, and that would be a valid 5 wave pattern, and that would complete this structure here. But what we didn't see was, I wouldn't say we didn't see it coming, but what we didn't really see here was the prospect of an extension. So if we draw this again, so this is kind of what gives me confidence that we have a top for now, with an irregular sort of pattern here. You can make the argument that, this is your, ABC leg here. And please stop me if I'm like not making sense or if I'm going a little fast. So this ABC here, typically when you see an irregular sort of pattern, you will see the C leg extend up here to this 1.382. That's typically the extent of a irregular sort of B wave. So what I think is going on here is we're going to start to see this sort of like the kind of like the corresponding backside of the pattern. It probably would be helpful if I showed you. 1 second. Here we go. So this is kind of what I'm talking about. So see how it kind of fits here. Like I'm not trying to. I don't want to try to like force things to fit, if that makes sense. Like I'm trying to kind of discern what's like what we're looking at and what's the highest probability sort of pattern here. From a bullish standpoint, what you could see here is a longer protracted sort of wave 4, and then this becomes like a 5 wave up. Now I think this is a little bit more realistic from a from like a, just saying in general here, like a charting thing. Let me add this. So this would really, in my opinion, this would be one of the more probable scenarios for the bulls. And this would be something where, if you're really short, this would suck. But on a pullback though, we should be able to know if it's going to continue or it's going to sell off even more. Again, like I'm not like, it does feel a little bullish up here with price action, but the bulls are looking a little exhausted. There's been nothing but, up from, second half of April. And that's a long time to be on the offense, with only having this tiny little dip over here. That would be, in my opinion, pretty unlikely. But again, we could have this pullback and I could be totally wrong with it. But I guess let's kind of model this out real quick. So I guess to kind of keep it or try to keep it simple here, we'll draw a line, and this will be like just an illustration. So I'm kind of thinking that if we have a bullish sort of thing, we'll see, instead of seeing like this 5 waves down, we might see, a pretty kind of weak staircase kind of thing. And I will publish these levels on the charts, but typically if you see like a wave 4 in a bullish market, it doesn't really go much past this 236 level. So like, 5770, that kind of thing. But it could. So like just saying like from a pattern perspective, this sort of wave 4, I think, is realistic, where, it kind of goes back to test this, maybe this high region over here. And this is not a, for sure sort of thing, but what we will want to do is target this sort of zone for adding some longs. And if you have major short positions open, what you could do here is hedge 1-to-1 and essentially just like, don't touch it. It's sort of like, like for example, some of my shorts are trapped right around here. I don't have any doubt that, in the future we'll be able to get out of them, but that's my risk tolerance. That's my sort of, cross the bear, I guess you could say. But I think that, the realistic bullish outcome is either we see some sort of bounce like this, or maybe it dips down a little bit more here. But this is sort of like your key level here, like this, like the 5600s, 56 or like 5580. And that's where, this is a little bit of an extension, I think, if it's going to be some sort of wave 4, but I'm just not getting it. I'm not like feeling like, we're going to do like a wave 5 here. Another alternative scenario that we could look at that's bullish. And again, we still have to consider what we're seeing right now at the top. like I said, it doesn't look impulsive. So to me, this wave 5 is kind of done. This just speaks like an irregular to me. So what that would typically mean here is, so let's say we do see that 5 waves down, could be something called like a zigzag. So we could see like a test of here. Let me trying to clean this up as I talk through it. Hopefully it's helpful. So what I'm thinking is this would be like a proper top. However, I still don't think that how do I say it? Like I still don't think that it would be like, because this would create like a head and shoulders pattern, and all the majority of the trading activity is going to happen within this sort of price zone. And even if it's bearish, we'll still see some sort of, so like between the 6,000 level and this, 5768 level, I think is pretty reasonable for this sort of outcome. This pattern here would be called an irregular, or sorry, this pattern would be called a zigzag, and it's a classic corrective pattern. But when you zoom out here, so this would no longer be this irregular. But if you zoom out, this could be like a proper wave 4. Is this like slow, steady kind of grind down where people are selling into it? But again, we need to consider some of the macro drivers, like what's going on right now with like Iran and all these other weird things that are going on. Like we are seeing some slowdown with some of the data. Inflation is going to come back, that kind of thing. I mean, you heard Powell talk about it today. So seeing something like this, I don't know if it's going to be realistic where you could see the next leg up like this, but it's possible. So what I find very interesting about the psychology of markets is you can have probably like 2 or 3 scenarios that are probably like the highest probability path, and they can result in something being bullish longer term or bearish longer term, but they still have the same pattern, if that makes sense. So for example, like I was saying before, this could be our, wave 1, 2, 3, 4, and 5, which would lead to all new highs or whatever, but not without, in my opinion, I feel like there needs to be a decent pullback here to accumulate some more inventory. Now, something like a, 768 correction, that kind of, or sorry, like 8% or something like that, I think would be reasonable for some sort of pullback, and maybe accumulate for a week or something like that, and then try for a new high, that kind of thing. So I guess I wanted to stop there because I've talked about a lot. So from like a bullish standpoint, does that make sense? I mean, it seems realistic to me at this time, but I'm not really sold on it. But I still want to at least like present the possibility that more than likely we'll see some sort of like head and shoulders, but we still have to drop first. So, if that makes sense. So, thoughts, comments, bullish things before I move on to the bear scenario?
One question I had, Gaines,
Yes.
was you mentioned your shorts that you had down in that area before it started to go up again. Yeah. Are those leverage shorts or?
Yes.
Okay.
Yeah.
So mine are too, and I'm just wondering if that was not a good idea for me to get leverage shorts because of the decay that they have.
Okay, so that's a great question. I'm sorry, I didn't mean to interrupt you. Go ahead.
No, that's all right. I was done.
So there's 2 things that I've noticed about the leverage ETFs. So the shorts, yeah, they're painful. But if you remember, I also had the same sort of short situation all the way back down here too, which I was almost able to get out. But then, it just part of that decay is that daily compounding. But the 2 things that you can do to get out of it, because this really does look like a like something that's just ready to fall. And I know it sounds stupid without having like actual data and stuff, but I see 2 very clear ABCs. We should see something like this, and this is, I'll go over this here in a second, but there should be some sort of real correction, like a real, like a 30%er kind of thing. And that would clear out a lot of this bullish excess and then give the institutions time to accumulate again. So what that means for these shorts or these leverage shorts is, if we see something like this, or even, if we have to go a little higher, there's no reason why we shouldn't be able to get out of them just from, the magic of compounding and building off of that. Because the worst part is sitting through the ascent, right? So like you just see it deteriorating every day. And then you might get a little bit of a reprieve here, but it's essentially counter trend at this point. And because it's been, trapped so much farther down at the bottom, yeah, it is kind of a pain in the ass to sit through it. But the two things you can do here are, so if you do see something like this form where it looks like there's going to be a strong bounce, you can sell calls against that and they deteriorate very fast with a leverage ETF. So, and I've been doing that like in a, like a 401k account. I would say it's a little tough to time it like with like micro bounces and stuff, but there's been twice now where I've sold some calls and, able to pocket, maybe like 10 grand or something on the way up, which makes it sting a little less, but still doesn't make it, okay. But if you're trapped, that's one thing you can do. The second thing you can do is you can hedge with the inverse ETF. So for example, if it's SQQQ, you could use TQQQ to balance every single day. And that's kind of like what I did up until about here, if you remember, where I closed the shorts or closed the long hedges at a loss, but still a little upset about that. But the thinking there was, even though the market kind of gyrated a little bit up and down, you still were able to essentially cancel that decay. It's kind of like selling a spread, or like taking out an options debit spread where you pay like a fixed amount, and the option that you bought as like a put or something higher up and then sold a put lower, it all kind of moves together, so it sort of like cancels out that theta burn. So that's kind of the premise here. So there, to kind of recap, those are really the two options that you have with the stranded shorts. Is while you're waiting, you want to play like any one of those counter trend bounces with either buying the inverse ETF or selling some calls or do both, that kind of thing. The only thing I would say is just be careful of stops. If you're going to actively manage it, then selling calls is probably just fine. Because again, with these inverse ETFs, they can go against you quickly, but as long as you're able to hedge up and if we do see some sort of pullback like this, where it doesn't go very far, you could still sell some calls because it's going to take maybe a week or two to kind of climb back and retest these highs. So does that make sense? Did I answer your question? Okay, probably a little more detail than you probably wanted.
No, that's great. I appreciate it.
But yeah, I mean, like stranded shorts are no fun. So I like to try to give detailed answers with that stuff, because a lot of people do have stranded shorts, and it's important to if you can't, well, I wouldn't say can't, but if you don't want to close them, like I'm not closing my shorts because I feel like this thing's going to hell in a handbasket pretty quickly, but that's just my opinion. It's not necessarily fact. So I'm prepared for the apocalypse. I'm not prepared for new all-time highs. So it's kind of like a risk reward evaluation where you're kind of saying like, all right, well, I'm thinking that the potential upside is a little bit more limited versus downside. Again, being so close to all-time highs, like that's why I haven't really been buying like the levered ETFs as it kind of grinds up here, just because I don't see any signs of like an imminent breakout. I see signs of bull exhaustion. But I'd say it's probably more like a 60% bear, 40% bull kind of vibe I have right now. So to kind of summarize that, I would say if we do have new highs and stuff, we're going to have to breach on volume. And I'm not seeing anything in the news lately that's bullish, right? I mean, we have ICBMs being fired at hypersonic missiles. We have wars and all sorts of weird stuff going on. So with that being, yes.
Yes, hi. Quick question. I think I'm, as you know, well, my situation. But going back to the first week of April, I mean, if you can see, I mean, I'm sure you've all seen the rate at which it all fell, right? Is really pretty fast. So I think I'm not wrong in assuming that there's a lot of hedge funds and all sorts of different people stuck short down there, including us. On that basis and that basis alone, would you say it's reasonable to sort of expect that there has to be some sort of correction, even if the technicals were wrong, right?
Yes. Yeah. And I mean, you're right on the money with that. We're here, let me pull up one of my charts here that has the volume profile. So pardon all the clutter here. But if you kind of zoom out, you can kind of see this this whole structure here. So even at this level, like halfway down, where we did see the test of like the 200 and the 50, I would say at the very minimum, this sort of range should be tested. And at the, I would say, you know, if you look down here, there really wasn't a lot of buy delta down here, and in fact, it's still very heavily, you know, sell delta related. So there's a lot of selling that went through here. Only the lucky few really got into this, you know, this crazy short squeeze here. And, you know, there wasn't, you know, some pretty powerful selling to get it back down and, you know, add to short cost basis and that kind of thing. But what we didn't see a continuation down where there probably should have been. And then also we didn't see a lot of that high buy volume. So it was almost like, so, you know, just in general, it's almost like, okay, well, we're oversold right here, so let's flip bull. But then as soon as you want to flip short again, like right around here, this is where we had those dirty bull tricks in the middle of the night to gap us up. So your question's really good, because what we're trying to do is, you know, essentially forecast or estimate where we might see some sort of pullback. But I think you're right. There's a lot of, you know, institutions or, you know, private, you know, equity funds and stuff that do buy these inverse ETFs. And I feel like a lot of those people were kind of left behind down here. This doesn't really look like a very, very healthy rally. Excuse me. Doesn't really look like a healthy rally. Yeah. This volume profile type is called a P, which kind of stands for pinned. But it's also like, you know, like I mentioned before, the dealers were positioned, you know, pretty long, you know, with all the protection that, you know, the crazy high VIX. But so to kind of summarize, there's not a ton of volume down here, and everybody was in panic sell-off mode. So there really wasn't enough time for accumulation. I think it was just something that just kind of, you know, ran and went with it. Yeah. So
and also I'm also thinking, like, if you look at the like zoom out like years stuff, you know, you can clearly see that it's actually been rallying at such a fast pace with literally no volume, and it's never happened in the history, right? This sort of shape, it's never in the history. So, I mean, it's difficult for me to think of one positive sentiment that's actually caused that rally, other than, I mean, you know,
greed.
If you know me, correct me if I'm wrong, but
no, you're never wrong.
Can't think of one single proper reason for that rally. But what was surprising is it just seems to be going up, and you know.
So it's a great. So your observation is not. I mean, it's correct. Absolutely. There is a very, very low kind of volume stat down here, which only lasted a couple days. And that's definitely not enough to accumulate a lot. I mean, if you look at something like, you know, down here, we had I remember this back in 22, excuse me, 1 second, where we had this kind of zigzag sort of pattern here. You can see that there's a ton of volume, and, you know, but it's over time. I mean, this was like a 3-month sort of period. Oh no, sorry. I'm wrong here. It was like a 9-month period, and there's just a lot of volume that was changing hands. And when you look at that, comparatively speaking, over here, I don't really see strength behind it. And I think you're right. So the one other comment I would say is, if you look at these sort of patterns, I'll take out some of this junk. So topping is an extremely frustrating process where, especially if you're holding short. And what I'll do here is, let's take a look at this range. So overall, I mean, 80 days, that's a lot. So 80 days of topping with a, 6% range. That was pretty frustrating, back in the beginning of the year. But also, for looking at this sort of consolidation pattern up here, I mean, it's less than half of that so far. So it really hasn't been consolidating all that long. Typically, you'll see about like 45 days, like 30 to 45, and then more serious ones being like 90 for these sort of consolidations. This is technically an ending diagonal. So unless, until they make a new high or something, I'm still pretty bearish on the pattern, just because of like, prior experience and some of these different things that they show you. Now, there's one other thing I could show you guys here that I think is relevant for this sort of ending pattern here. There is a possibility that we could see something like this, where it does make a slight new high or a double top, where you like it just kind of expands. I just call it like normal like pattern expansion, where you could see like a real sort of, let me zoom in here, like a real sort of quick kind of sell, which completes this the ABC pattern I've been showing over the last couple of days, and then you could see the bulls try to buy it up pretty quickly. That would be a pretty decent spot to hedge up, just in case they pull it up and try to make a new high. But I think that enough people have sold into this yet, and just like we were saying, there really hasn't been a ton of participation, not a lot of volume. So this is like a counter trend sort of. I think it's just kind of greed driving this. Like people just don't want to step in and sell because they want to see maybe if this guy's going to drive it any higher, and it could definitely happen. So this is just something that I was thinking about last night. Excuse me, last night here. But now that we've got the Fed, the Fed news, what I have seen before with these sort of patterns, guys, is you could see something sort of like this where it bounces and then people think, oh yeah, we're going to head up and make that fifth wave, and then it just doesn't make it. Usually that happens with an ending diagonal where we've had a decently long period of just consolidation. So that could happen. So that's probably the third scenario I've showed you guys, but it's still valid. And I wanted to make sure that you guys are at least like aware of it here. I think one of the things we're going to want to look for just over the next couple days is, and this might happen tonight with futures, not sure yet, but we want to see like this continuation of the C leg. And then maybe you want to see, the short little rally. And then this is where you'll see that kind of 5-wave down that is expected. Now this would be like your first leg down kind of thing. So it wouldn't be that crazy. I do think we've already kind of seen that wave too. I know it's probably not a popular opinion, but you probably see something like this. And this would be the ideal scenario where you get these longer sort of moves. So hopefully that makes sense. This is just one of those one of those scenarios here where you get these the ABC down, ABC back up, and you end that C leg with an ending diagonal. You can still kind of see that it's still within the normal sort of measurements. So for example, see how well that fits. So this 1.382 level, that's sort of like the maximum that a C leg will go. So that's why I was saying like, okay, if they make a new high, like a local high, like 60.71. So if we make a new local high, then I would start to be a little bit more concerned, not just because we might see this wave 5 kind of thing, but that also reaches this 138 level, which is pretty key if it's a C leg. If we head higher, then most likely it'll be this 1.618, and then it'll actually become like a wave 3. So I think that might be where Alex is thinking, but I don't see enough energy behind this to drive it that high yet. We certainly didn't hear anything bullish today, and bombs keep flying all around the planet and stuff. I don't think that that's going to be a bullish catalyst either. So those are.
There's a lot of I have noticed a lot of instances where the market is moving in the opposite direction to the sentiment. Sometimes you hear the worst news and wake up and it's done a small reaction, but then carried on kind of thing.
Yep, it's called climbing the wall of worry. so you think about think a lot like me. Okay, so I'm talking about these bearish things or whatever. But we still have to entertain the bullish scenarios, or else we're not doing a proper job of analyzing like the markets. Even though I do have a bias, right? It's bearish because I'm just looking at charts and seeing what's around me here. That sentiment combined with all that stuff kind of equals bearish, but the bulls can still drive it higher because nobody's really selling into it yet. There is some selling, and I do think that there's like positioning from bears that is starting to materialize. So that's why I was saying, I think last week, where it's like the clock's ticking for the bulls. It's really their game to lose now, and that's kind of where like the sentiment is. It's either or. Actually, just I wrote an article on Seeking Alpha about it a couple days ago. It's just called like the tale of two markets, where you have your bulls that think we're going to all-time highs, or the bears that think we're going to the apocalypse. But I think we'll probably just see some grind and stuff. But to kind of return to the previous point, it's I think that what we're looking for is a breakdown of this pattern, and if it does break down a little bit lower, that like this pattern expansion sort of thing, it doesn't really work that well unless you start to see bounces at like higher fib levels and stuff. So I guess what I mean by that is, I would only be concerned about bullishness if we ended up reaching this high, like this, this 1.382 for, for the S&P. And that kind of, that at least to me would signal that the bulls are still serious about driving this higher. I still now think that we've got enough, backdrop here where it's not looking as bullish. And also we've just been seeing this slow, steady grind without a lot of participation. So I guess we'll see what happens, but hopefully that makes sense.
Sure. Thanks.
Hey, Gaines, if
yes.
it did reach that 1.382 extension, would that mean that would be a wave 3?
Say that again. Sorry.
Oh, I'm sorry. Yeah, if it did reach the 1.382 extension, would that mean that that's in a wave 3 then?
Oh, are you talking about the like if it breached this level here?
Yeah, if it breached the 1.38.
Yeah. So typically what you'll see is like, the bulls trying to test and punch through the ceiling and see what kind of resistance is there. And that's where I like to look at the daily view. And this is why I was kind of celebrating the other days, because I think what we saw here on June 11th was a pretty firm rejection of that level. Now it looks a little bit more pronounced, like in the, or it's a little bit different with the Nasdaq, but the S&P is more of I feel like more of a global driver versus, versus like the Nasdaq. So there was another attempt here, which was that sea leg we saw, a couple, 2 days ago or whatever. But it still got rejected up here. And, the next day, this is a kind of an engulfing sort of candle, but the high at least still held. So that's why I'm also thinking too, that we had this big candle of volume down here at the daily level, and then also on Tuesday. So if we do see something like this, where let's just say it kind of creeps up a little bit more and heads up and makes a new high, well, then I think the next test is going to be this like this last high. And what could happen here is either it forms like a double top pattern where it's like the same price and then sells back down, or you see a breach higher and then it might hit this 1618 level, which that would be like the end of a wave 3 kind of thing, which you would see, like a wave 4 pullback, and then like a 5 with a higher high. hopefully that hopefully that makes sense. But there's still, I guess there is a little bit of accumulation that's been happening here, but I think that the sellers are picking up a little steam, and I don't know. It's kind of like I said, it's a bull's game to lose here. So, but yeah. So technically, it would. I wouldn't say like it would invalidate the C leg. You could still see. It's really just more like nomenclature, I guess you say. I don't know if that's the right word for it, but like I was showing before, you could see like irregular pattern kind of develop, but I don't think we're at that point yet. I think like the one thing to just focus on is if there is a breach of this high, and I'll mention that in any notes or anything like that comes up, like if we are in danger of that happening. But hopefully that helps. I think we might actually get our maybe we're on the call here. I think we might actually get our confirmation that the bears are taking over if we do see this breach of this trend line here. And I think we'll probably see that tonight. If we're going to see that, we'll see it tonight. Because futures are open tomorrow and the markets are closed. So I'm looking for something kind of like this, where you see a breach of that trend line. But what I would really like to see is a little bit more of a significant kind of C leg sell, and that would make this pattern look a little goofy if we expanded it. Because you don't really see channels like this on the way up, or like channels that end. You see a compression pattern like this, where it just kind of coils and coils until you get to a real fine point, and then it usually sends it back down. Or inversely related, where if it's it's kind of looking like it's scooping, then you can see that there's accumulation and strength building. But now you're kind of seeing weakness as it kind of peters out. Okay, so that's equities. I'll show you guys quick here. 1 second. Let me share my other screen. You guys still with me? Hopefully I didn't put you all asleep. I'll assume you are. So we're looking at the Dow here. This one is a little bit different. Like I was looking at this last night, kind of thinking, I don't know, like it really seems like they're going to go for it here. But I'm also kind of thinking too that it's probably done. Like this is an irregular, like we had talked before, like with the the Nasdaq, where this little high here isn't necessarily like a wave 5. It's more of a, now we're just kind of looking for now we're looking more for, sorry, no, it's hard to see, something more kind of like that. So that's what I'm looking for, and typically you'll see a retracement to the 0.618, which was hit right on the nose. I know it's a little small, sorry. If it's a wave 2, you'll see that this 0.618, and that's pretty much what happened. It just sold down right after that. Now, if it makes a higher high than this, 42,685, then the pattern isn't quite done. So let's not go nuts with bearish calls. So that's kind of what I'm thinking here for the Dow. Small caps. Oh man, what's that? Uh-oh. Screwed it up. Small caps. Yeah, this 0.618. I still think that this is a little bit more of like a like a pattern setup, kind of like this. But that would be a pretty serious correction. I don't think that that's realistic at this time. But the rules, the Elliott wave rules, pretty much say that. Well, I mean, it's tapping its 200 moving average that it fell below. That's actually a really bearish chart. So, I mean, small caps, typically all boats rise and fall with the tide, right? So small caps, dumping here could drive the rest. Maybe the Dow, Nasdaq's typically the strongest, but you could see a lot of these, or a lot of this sort of this behavior, because all ships rise and fall with the tide. So small caps start to head down in a couple percent. I would look for the others to follow, or vice versa. All right, let's take a look at the yield here. Yes, I got a hand. Go for it.
Okay. I had a question on those the put spread on the
Okay.
QQQs.
Yes.
What your feeling was.
Let me
I
pull
think
up.
they only have a week to go now.
Yes. So tomorrow, so let's say I'd say Friday is going to be the big. I'll pull up the cues here. Friday is going to be the big one. So if we don't see any sort of movement here, let me pull up. Sorry, one second. Here we go. Oh, I took it out of here. Crap. Okay, so that was what was it? 520 and 510.
That's what you started with, yeah.
Okay.
I kind of rolled mine up, so
Okay.
I have
Yeah.
like 530s and 510.
Okay. So what I was thinking here is if we do see that sort of sea leg move down, that'll probably put it in profit, or at least to get it close to there. I don't know if we'll see that in the next couple days. So I think it might be a better option to roll it. But Friday is probably the call to do that, at least for like the current set of strikes. So just looking at this here, like the point of control for the whole zone, this I think would be a pretty decent buy area. So we might see like something like this, and that would just be too long, and the spread wouldn't really be effective there. So I would say if you already moved up the strikes, then great, you should be in a good spot. But like the 520 zone seems to be where there might be some trouble. Go ahead, you were going to say something.
Nope.
Okay. So yeah, I would say by Friday, that's sort of like the make or break kind of day. I'd like to see some sort of selling tonight and tomorrow. While cash market people can't do much. It just seems to be how it goes these days. But if we don't see that, then maybe Friday, if there's selling in the morning or something like that, that I'll make the call to roll it. But I would say it is still getting a little weak here, so I don't think that it would be, or I don't think it would take too long, maybe like another 2-3 weeks. But I would also probably want to roll it up with strikes and then probably add another set of spreads. So it's sort of like double down on the bet now that we have more price action to read. Does that make sense?
Yep.
Cool. Okay. All right. Let's cover 1 second. Let me reshare. So I had to jump between my two different panels here. Okay, so let's look at the 10-year yield. So with today we did get that little appreciation there. Go ahead. Sorry, you say something? Oh, sorry. Maybe that was just a little glitch. But this is still looking like a bull flag. And now that we got the Fed stuff out of the way, we did get a little bit of a reaction here in the yield. It was starting to look a little oversold, but now we're starting to see some more information with that. So it's also really convenient too, because again, futures are only open to tomorrow. So like if you bought a bunch, as the day ended today, you're kind of out of luck until Friday. So if markets are down 2% on Friday, you have to buy the cover, and that could it could at least be like a good long opportunity for short term. So you guys that are watching pre-market and want to trade pre-market, you might be able to get in and buy a small dip or whatever on Friday. But I'll post some charts and things as stuff develops tomorrow. Like it's not like I'm doing much. So I mean I am, but this is my job. So I'll be posting stuff. All right, so let's look at some of the metals. So gold, very surprising today that it would kind of drop like that. There was a really big sell with oil too, but with gold here, I'm kind of thinking that this regular flat pattern here is playing out. So I'm kind of thinking here that this was the ABC that's already been done, and now we might be on the backside where we could see a bit more of a slide, and then maybe something like that. I'm just not sure yet. And I was gonna go long gold again this morning. Glad I didn't. but anyways, I think that gold's gonna take a bit of a break here, while the yield is gonna try to punch up a little bit higher. Silver. So silver is taking a bit of a break here, but what's good to know about this is silver I still think has a lot more room to run versus something like gold. And we might see something like this where it just kind of makes an ending diagonal. So I do expect there to be I do expect there to be like another kind of thing that shoots up a little bit higher and hits this bull target 1. But I would like my my thoughts on this are like I would take some profit like here, as opposed to try to wait for it to kind of head up here, because I know dealers are really short silver. There's a lot of bullishness there, and I can't remember where I found it. I'll have to see if I can find it again, or maybe Danny can help me see if you can find it. But there's this. This really does kind of look like a wave 4 low here, and even if it might actually head a little bit down or a little bit lower yet. It's kind of what I'm thinking. You might see something like this, but the move just doesn't really look like it's done yet. So right around this accumulation zone, this like 36.4, this is where I think, or the point of control, this is really going to be that volume profile that we're looking for, like this lowercase kind of b. So hopefully that makes sense. All right, so oil here. This was crazy. I just clicked on buying 2 long oil futures contracts right up here because it was really heading high, and it rejected for some reason. I think it was a limit order instead of a market, but it saved my butt. Probably saved me about $2,000 because like the very second that happened was this whole thing dropped at least 1.5%. I spent the rest of the day trying to rally to figure that out, but this is just news on whatever. They don't really need an excuse to do what they do. They just do it. But for oil, this is looking like just a regular old triangle here, just a very fast one. So I think that there are some people out there that want to sell oil down because I guess geopolitically, a lot of the countries that the U.S. doesn't really like peg a lot of their budget revenues off of oil revenues. So it's one of those things where you can wage economic war and not have to fire a shot kind of thing. So I'm trying to be careful of that. So if we're gonna, like as an example, this is technically a breakout, but I don't think it's gonna last. I think it's just it doesn't have enough. It doesn't look like it has enough energy to keep heading on up. So the oil longs are in profit as of today. So I wanted to, I'll probably take profits on that like Friday or something, and then wait for like a retracement for some of the shorts. For gas, gas is getting higher here. I kind of wish I would have held on to the Boyle trade, but I don't know. I wanted to de-risk going into the Fed, the Fed announcement, just because like I knew that like oil was going to be volatile, and I also knew that like gold was going to be volatile. So I wanted to just take it off the table and then reset, especially like the TMV trade. So I mean, it's good. I mean, probably saved $800 in a drawdown or from profits for the TMV reset today. So I'm okay if gas has a little higher. I got money out of it instead of lost money, so that's good. All right, stocks. This one's kind of a little confusing. I do see a pretty clear like 5-wave sort of pattern here. It could be that this is like a wave 4 here. I don't know if you guys can see it, like this 1, 2, 3, 4, 5. So the bull target 2 might be hit here at this 233. It's done a little bit of price discovery and probing up here, and now that the dividend's been paid or the ex-div's over, as you guys can see here, it's definitely overbought. So this is where I'm trying to focus on here, is reading these more macro indicators and trying to gauge the logic on that. Now something like Bitcoin, Bitcoin is starting to look a little weird. It's got some declining strength, and you guys can see the declining volume trend down here. And I still don't know if it's done though. I think it might head up here to this bull target 1 or even a little higher to like this 1.236. And as I mentioned before with the other B wave in a regular, it could head up to this 1.382. So not sure, but it doesn't seem like MSTR is really participating with it, I guess you could say. Okay, so that kind of does it. Any questions or requests I could take a look at? I'm gonna pull up my other chart.
I'm good.
Okay. All right. Oh, sorry, shared the wrong one. Is anybody in the MSTR trade at all, or the
Which one?
the MicroStrategy short?
Yes.
I
Okay.
am.
All right, let me pull that up. Hopefully, it's gotten a little easier over the last couple days here, but all right. So MicroStrategy, this one looks a little bit tired as well. I think that we will see something like this. So, I mean, right now it's testing its 50 daily moving average, and we've just been seeing some clustering with some pretty lazy volume as far as I'm concerned. I think that you'll see like you probably see something like this.
We're gonna go get the hoagies soon.
Oh, getting hoagies? All right. But yeah,
My son just came in.
that's fine. So one time I was in a meeting presenting for the CEO of some company, and I had my reminders turned on, and it wasn't anything embarrassing, thank God, but it was just like, it reminded us to put the chickens in the smoker, and that was like the topic of conversation for the next 15 minutes. So like, but wait, guys, I spent like all night on this presentation. Can we talk about that instead? Anyways, so I do think that we'll see something kind of like this, or it had a little bit lower. Yeah, like MicroStrategy is, their statements are terrible. Their entire fortunes are based on Bitcoin essentially. So I think that this is just not a strong company, and the prior high here, this does look like a sort of like a zigzag sort of chart pattern. So I would say have patience with the with the MSTR trade. I know it can be a little difficult, but one of the things that I've been looking for here is some sort of signs of relief, and so it didn't really breach higher to like the 618. So I don't think it's going to be like a 5-wave sort of thing. So what that kind of means here is we'll probably see maybe something like this over time. I think I added a little bit more. So like, the head's down here with this first C leg, I think you can get out of it, but I definitely don't think it's a strong company. So I would say like have patience with the shorts. I know it kind of sucked. Hopefully you guys were able to hedge with MSTU on the way up. I think I mentioned something about that like right around here when I was at like 350 or whatever. But yeah, that's just kind of how it goes sometimes. I think this just hit the 0.618 retrace. Yeah, right there. So you can see how beautiful these things work, right? So at this 425 zone, that's kind of where it bounced back off. So I don't think it's going to last very long at these levels. I think if things start to sell off, it's going to head down. Let's take a look at Tesla real quick. Tesla, this is why I added more today, because you can make the argument that this is a pennant and it could do this, which would not be cool, but that would also require a lot of participation for other other stocks. The damage has been done as far as I'm concerned with Tesla, and I think that like we mentioned before, there's a lot of heavy sell delta down here, and I think that people want their money back. So we'll probably see this 250 level sooner versus later if we do get a decent pullback with equities. What else do we cover? Nvidia, this one's just kind of partying around up here, not really doing much. So I added some shorts. It's just consolidating up here, and there was a dividend that was just paid. The earnings came in. There's a lot of time here for this thing to sell off and then rebound again. You can see all this sell delta up here. That's just people waiting for, oh yeah, there it goes, even more. So you can kind of see this this big old bright red high, heavy sell delta. This is where I think a lot of people are shorting NVIDIA. I mean, for whatever reason they think, but to me it looks like a decently clear ending diagonal, and I kind of feel like NVIDIA and the other mega caps have been really what's been propping up the market. Kind of how I was talking about this chart here with the market breadth, where it's declining. Well, the indexes are pinned, and that's not really a good sign for things staying elevated. What's the last one? So I think that's it. Is there anything else? Anything you got questions about? If not, we can wrap up.
Okay, thank you.
Thank
All right,
you,
thanks, guys.
James.
Appreciate it. You have yourself a wonderful afternoon or evening or morning or whatever happens.
Thank you, guys.
You
All right,
too.
thanks, guys. Talk to you later.
See you on Friday.